everyone. Welcome to today's class. Our class today, we shall be looking at the introduction to taxation and tax administration in Nigeria. Apparently, this is combination of two chapters in your ICAN study test, and that's chapter 1 and 2. If you have gone through our course content for this diet, topics we have our first class. So we will not be going into these topics in detail in today's class, and the reason being that we have pre-recorded this particular topic in the very first diet for ICAN online tutors, and in the following diet, another recording. So which you may have two recording on this particular topic. So, and that's why is to advise and encourage students to go through the video lectures in the class. So with this, coming to class will be like, and you'll be able to interact with your lecturer, ask questions on areas you didn't understand, or probably where you need more explanation. Okay, so I believe every one of us, or most of us, have watched the video lectures and have some questions to ask during this class. So under these two topics, our focus today is to discuss briefly on the introduction to taxation and tax administration in Nigeria. Then we have a classwork for us, which we do together after the interaction section. And at the end of that, and at the end, we give assignments. So you are expected to work on these assignments and submit them before the next class. So immediately after today's class, I will be dropping my email address on the class platform so that you can submit all your assignments to me via email. Is that clear? Hello?
Yes,
are we together?
sir. We are, yes, sir.
So under these two topics, we are looking at the definitions of task and belief. And these are importantly, some of us that is doing this course for the first time. Maybe probably you study.
Please, your voice is going faint.
Okay, can you hear me now?
Your voice is okay, better now. Please.
Hello, can you hear me?
I can hear you now. It's better now.
Okay, that must be network issue.
Okay.
Yeah. So for the purpose of some of us that are doing this course for the very first time, probably you didn't study accounting in school. Okay, so this may be your first taxation. So we are going to take the definition of tax in brief, the objectives and purposes of tax, types of taxes and tax system, basic concept of taxation, distinction between taxes and levies, principles, and then canon of taxation, sources of Nigerian tax laws, multiple taxes in Nigeria, the objectives of tax amnesty in relation to voluntary assets and income, declaration scheme, VADs, and voluntary offshore asset regularization scheme, VAS, nature of tax administration, organs of tax administration, federal, states, including local government, that is the 3 tiers of government, composition, Authority and the Joint Tax Board, taxes and levies imposed and collectible by the tax of government, and registration of taxpayers and filing of returns. Also, we are going to ask appeal tribunal, the procedure of appeal in brief, and the role and relationship between tax legislation and administration. Are we together? Hello, are we together?
Yes, sir. We have to mute so that
Okay,
we
that's
don't
good.
interrupt your class from background noise.
Okay, thank you. Mrs. Omolola is saying she can't hear me. I believe you can now hear me clearly. Hello. Hello, Mrs. Omolola, can you now hear me clearly?
Let's tap on our audio.
Yes, I can hear you.
All right.
Hello.
Okay, that's good. Now let's continue. Now, before we move to efficiency of administration, if you have watched the video lectures, can you please, or let me put it this way, do you now understand what task the administration of taxes in Nigeria? Do you understand the purposes of taxes, including its objectives of tax in Nigeria? Do you know the types of taxes and the tax system we practice in Nigeria? Do you know the
To some extent.
Okay, that's good. Do you know the tripartite aspects? The basic concepts in taxation, are they what? Are they clear to you? So now, in brief, tax, like we all know, is what is a compulsory levy. Okay, is a compulsory what? Is a compulsory levy. And who collects this tax? It is the government that collects tax from who? From its citizens. In other words, tax is a compulsory levy imposed on a citizen living in a what? Living in a particular jurisdiction, and it is collectible by the government. Okay, so that's just a brief definition of tax. Okay, so we have definitions from they all agree that was tax is a levy collectible by the government from who? From its citizen. So these are the basic components of the definition of tax. Okay, so when you are defining your taxes, irrespective of how you understand the definition, you must include these elements. It is a compulsory levy imposed on all residents living in a particular jurisdiction or within a tax jurisdiction, and it is collectible by who? By the government of that jurisdiction. So now, before in Nigeria, of course, before we have prior to 1960, okay, so there are various type of tax or taxes that we have, though in that true sense, but of the fact that they are compulsory levy, okay, imposed on the citizens of that jurisdiction. For instance, now in Yoruba land, we have the shakoles, which is collectible by who? By the obas, by the chief, by the royal family. Okay, so it is collectible by the head of what? By the head of chiefs. So, for instance, now if you acquire a parcel of land, you need to what? You need to pay some money, some fee to owners of those land, to owner of the land. Yes, the owner now may not be the principal owner, That is the person you have acquired the land from directly. But the owner of the land, in Yoruba, they say, àwọn ọmọ onílẹ̀. Okay, so they are like touts. If you don't pay them, they will disturb you. They will disturb your progress. So you need to pay them. It's like you giving what belongs to Caesar to Caesar. That's that. Okay. Now, what is the objectives of these tasks? Or what are the objectives and purposes of taxation? Now, let's take the objective first. Now, one of the objectives of taxation is revenue generation. It is for what? It is for revenue generation, because government has imposed a particular levy on me and you. Now, to me and you, it may not be convenient. We will not get direct benefit on the government, on the money we are giving to the government, but government is collecting this money for them to run their what? To run their administration. So the money this tax is like what? Is like a fuel. Okay, it's like what? Is like a fuel that fuel their administration. So it's like a gas that fuel their administration. So without money, nothing can be done. Okay, so they have various projects to embark on. They have salaries to pay, and among other things. Okay, so one of the objectives of tax is what? Is for revenue generation. So another objective is the redistribution of income and wealth. Redistribution of what? Of income and wealth. Now, for instance, now let's use Lagos State as a good example. Now, you notice that out of 36 states we have in Nigeria, Lagos has been seen as what? As a forefront state in terms of project implementation and the likes. Okay, now why is it like that? Because what? Lagos has huge revenue generation. Before Ambode, when Ambode was there, I think during his last the last year of his tenure, he had a budget of 1 trillion. Okay, so he had a budget of 1 trillion. You can just imagine me having a budget of 1 trillion and my environment looks as if or people in my community or people in my state are now suffering. No. So I must make them happy, because the more I make them happy, the more they see the benefits of the taxes they are paying, the more they see the advantage of paying taxes, the more revenue for the government, more revenue generation for the government. Okay, so now for some people, Lagos is too hostile to live. Why? Because they complain. They pay for waste management, they pay for this, they pay for that. You must pay, you always pay. Okay, so for you to have good road network, access to good road, then governments must embark on projects. Now, this money were collected from companies, from high net worth individuals, among others. Now, governments in return build schools so that the poor probably can send their children to public school. In this school, government equip it with good facility, educational facility, forward, so that these people can have convenience environment for their study. Okay, so apart from that, you see we have recreational center, we have hospitals.
Can you hear me, sir? Can you hear me, sir?
Yes, I can hear you, sir.
Okay. Thank you very much.
Hello.
Yeah, please, Mr. Do notice. I want to be sure that you can hear me from my own.
Okay.
Yeah,
No problem. You are welcome to class. Okay. So that's another objectives of taxation. So the redistribution of income and wealth does not necessarily mean that government will be sharing money of social services by having infrastructural projects and the likes. Okay, so another one is the management of the economy. So taxation is important in planning of savings and investment, and by harmonizing it with development strategy and changing economic structure. So the government can use taxation as Nigeria is coming up with additional taxes. Now we have sugar tax. The educational tax has been increased from 2% to 2.5%. Why? Because their aim and objective is to reduce our borrowing, to reduce our debt ratio. You understand? So that's their objective. But to the citizen, it is what? It is an additional tax. It's like government are bringing what? Bringing more taxes on us without getting the benefit in return. So, yeah, but that's not where we are. So a tax system can also provide the government with effective and flexible instruments for the day-to-day management of the economy. So that's one angle. Another one is the harmonization of economic objectives. Harmonization of economic objective. And finally, taxation is a device favorable balance of payments with other countries. Now, let's look at the types of taxes and tax system. Okay, so what are the types of taxes that you know? Okay, hello, can you hear me? How many types of taxes do we have in Nigeria?
My hands are up. Oh, I have my hands up. I want to hear me.
Hello?
Hello.
Yes, I can hear you clearly now.
Can you hear me, sir?
Yes, I can hear
Please,
you now.
would you help me to explain the educational or tertiary educational tax? What is this about, please?
Okay, because we're in a revision class, I won't mind to do that. Okay, tertiary education tax is a tax payable by corporate organizations, and it is payable only for companies that pays income taxes. In other words, tertiary education tax is a tax, is a fund, okay? Is a fund that is being used or disbursed between the three level of tertiary education we have, or tertiary institutions. Let me put it like that: tertiary institutions, the universities, the polytechnics, and what? And the colleges. Okay, so I think the ratio is ratio 60-20-20. Okay, so ratio 60-20-20. Is it, or 50-25-25? But what I know is that the universities has the largest share of the fund. Okay, so this tax is collected, or sorry, this tax is administered. Okay, this tax is administered by the Federal Inland Revenue Service, and it is imposed on corporate organizations and not individuals. Okay.
All right. Thank you, sir.
Okay. Now, the types of taxes and tax system we have in Nigeria. We have proportional tax, we have progressive tax, and then we have types of tax or taxes we have. Okay. So these are the three types of tax we have. Now, note that we have two types of classification of tax types. Okay, so Now, this proportional task, progressive task, and regressive task is just one classification of tasks. Now, I will explain this. For the proportional task, okay? So this proportional task is a flat rate task, okay? So it is assesses on taxpayer at a flat rate on his assessable income. So in essence, this type of tax is payable on what? On taxpayers' income. Are we together? So an example of this is what? Is our company's income tax. It is proportional. It says that if you have 100 naira and the income tax rate is 20%, you cannot pay more than 20 naira of your income. Okay, so you cannot pay more than or less than 20 naira of your income. So the only situation you can pay less, in fact, there's no way you can pay less because the tax rate is charged on what? On your taxable income. It is charged on what? It is charged on your taxable income. In other words, you can have 1,000 naira and the whole whole 1,000 naira is not subjected to tax. So it may be a portion of the 1,000 naira that will suffer tax. Okay, so depending on your tax planning. So it is a task which objective is to redistribute income from the well-to-do to the less privileged, from the haves to the have-nots. Are we together? Okay. So now the other one is the progressive task. And this form of task is a graduated task, and it is applied on what? On income. Okay. So it is also applied on income. So why the first one, which is the proportional tax, is for what? Is on corporate entities, is for corporate organization. This progressive tax, individuals, okay, or business name. So it is a progressive tax because we have a tax table for it, and the tax table rate shows what? Shows a graduated one. So the first rate is 7% on your income. So if your gross income or your annual income is, let's say, 3.5 million. So the first 300 of this 3.5 is subject to tax at 7%. Again, if your taxable income is 3.5 million, the first 300,000 of these 3.5 million will be subject to tax at 7%. Then the next 300,000 will be subject to tax at 11%. Subject 600,000 to tax out of 3.5 million. So because these amounts are what they are accumulating. Okay. Hello, can you guys hear me clearly?
Yes, we can hear you.
Your voice is breaking. You said the first 7% is on 300,000. And the second one is on what?
The next 300,000 is not the second. The next 300,000 is on 11%. Hello, can you hear me?
Okay,
I hear you.
please, let's understand this better. The tax now, is it the annual tax? Let's
Yes.
say annually, if you are to earn like 1 million.
Okay, annually?
The first 300, yes. The
Okay.
first 300,000 of that 1 million will be taxed at 7%.
Yes.
Is that what you're trying to say?
Yes, if your taxable income is 1 million,
Second,
the first 300 of the 1 million is at 7%. You are correct.
okay.
Yeah, go on.
So the tax is not on a monthly basis.
No, it depends. Okay. So the tax law, we have reliefs and the likes. Okay. So everything is based on annual. but you can always divide and you can prorate. Do you understand? You can always divide and prorate.
Okay.
For instance, now, if my monthly salary is 1 million naira, okay, if my monthly salary is 1 million naira, now we have consolidated relief allowance. This consolidated relief allowance is the higher of 1% of your gross income or 200,000 naira plus 20% of your gross income. That's a relief that is given to you, meaning that this 20% of your gross income plus higher of 200,000 naira or 1% of your gross income will not be subject to tax. We are giving you free. Do you understand? Now,
Trying to understand that. Not so
okay.
clear.
Now, this is it. My annual income is 1 million naira. That is, my income for the whole year is 1 million naira. Okay. Now, the tax law has given some incentive, meaning that the whole 1 million will not be subject to tax directly like that.
Okay.
So they are giving me 20% of the 1 million naira that I should take it away. Is a relief.
Oh,
it should not be subject to tax.
okay.
Do you understand? So they are giving.
Okay.
So I will
Yes.
first deduct that 20%, which is 200,000. What did I have left? I have 800,000, right?
800,000.
There's another relief that says they are giving me 1% of my gross income. So what was 1% of 1 million naira? That's 10,000 naira or 200,000 naira. So the higher of 1% of my gross salary or gross income or 200,000 naira. So since my gross income is 1 million naira and 1% of 1 million naira is how much? Is 10,000 naira. So definitely 200,000 naira is higher than. So now I'm taking
10,000.
200,000 again, plus the 20% I've taken earlier, making how much? Making 400,000. So it is on the 600,000, which now represents the taxable income. Okay, which now represents the taxable income. So your personal income tax or company income tax is not subjected.
I cannot hear you.
Hello, are you there?
Your voice is going down now. Oh, I can't hear you.
That's network issue. Okay, so once it happens like that, just call my attention. Okay.
Okay.
Hello,
Son.
can you hear me? So that
We
was
can hear you now.
I'm very, 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 very.
You are off again. Hello.
Can you hear me?
Hello. Okay, you are on.
Yes. Is the network issue. I'm using two types of network. I'm using Glo and MTN, but still yet they are doing rubbish.
Please, can you come again with that taxable 600,000 out of the 1 million?
Okay, no problem. So again, just always call my attention once you notice my speaker is off like that. Okay. So now let me take it again. Income tax, both for corporate organizations and individuals, okay, they are not assessed on your gross income. Rather, they are assessed on your taxable income. So in my case, my annual income. So the government or the tax law has given me some relief, which is 20% of my gross income plus higher of 1% of my gross income or 200,000 naira. So since 200,000 naira is higher than 1% of my gross income, which is 10,000 naira, I'm taking 200,000 naira. And don't forget, I have 20.
Hello, you are off again.
So now I have 200,000, which is higher than the 1%. So I'm
Okay.
taking 200,000. Now,
Okay.
I also have 20.
Hello, you are off again.
Can you hear me now? Okay. So I'm taking the addition of 200,000 and 20% of my gross income. Okay. So
Okay.
now making 400,000 naira. So I will deduct 400,000 naira from my 1 million annual income. Then I have a taxable income
of 600,000.
So that's the amount that will be subject to tax. Do you understand?
Yes.
So that's the
Yes.
amount that will be subject to tax. So now, this 600,000, what does the tax law says? The tax law says that I have 7% on my first 300,000 naira. So now my first 300,000
Okay.
out of 600 naira will be what? Will be assessed to tax at 7%. Is that clear?
Oh,
Then
yes, sir.
my next 300,000 will be assessed to tax at what percent? 11%.
11%. Okay.
Now, I don't have
Yes, sir.
any income again, because the
Yes.
first 300 and the second 300 has taken off all my taxable income. Okay. Now that's
Okay.
case one. Case two is where my annual or gross income is 4.8 million naira. Okay, so if my annual income is 4.8 million naira, what does the tax law says? The tax law says that I have 20% of my gross income. So what was 20% of 4.8 million? 20% of 4.8 million should be 960,000. Am I correct?
Yes.
Yes.
You're
Okay.
correct, sir.
So plus 1% of what? Of my gross income, or 200,000. So if you do 1% of 4.8 million naira, how much do we have? We should have 48,000 naira.
4.8.
Am I correct? We should have 48,000 naira. So it seems
Yes, you're correct, sir.
200,000 is higher than 48,000 naira. So I'm taking 200,000. So
200,000.
you now add the 200,000 plus the what? Plus the 980,000. Sorry, 960,000. So how much do I have like that? So I have 1,160,000, right? So you now deduct this 1,160,000 from your 4.8 million. So how much do I have? I should have 3,640,000 naira. And sorry, 3,640,000. Am I correct?
Yes.
Okay. Now let's come to our tax table. Okay. So what does our tax table says? Our tax table says that our first 300,000 will be assessed to tax at what? 7%. So you do 300,000 multiply by 7, you have 21,000 naira. Then our next 300,000 will be assessed to tax at 11%. So you do 300,000 multiplied by 11%, you have 33,000. Am I correct? So we have taken 600,000 out of 3,640,000. Then the tax law says that the next 500,000 naira, out of this 3.6 million will be subject to tax at what rate? 15%. Will be subject to tax at 15%. So if you do 500,000 multiplied by 15%, you should have what? You should have 75,000. Am I correct?
Yes.
Okay. Now the tax law moves further by saying the next 500,000 should be assessed to tax at what? At 19%. So if you multiply 500,000 by 19%, you should have 95,000 naira, if my memory serves me right. Am I correct? 500,000 multiplied by 19%, you should have 95,000 naira. So in total, we have subject 1.6 million naira to tax. Am I correct? Now, the tax law says you subject the next 1.6 million naira to tax at 21%. Hello, are we together?
Yes, we are.
The tax law says that you subject the next 1.6 million naira to tax at 21%. So how much do you have?
336,000.
336,000, right?
Yes.
Correct. Then finally, the tax law says, in total, we have subject 3.2 million to tax. Am I correct? Hello?
Yes.
So in total, we have subject 3.2 million to tax. So now, the tax law says that anything above 3.2 million, any sum above 3.2 million and 3.2 million naira will be assessed to tax at 24%. Will be assessed to tax at 24%. Are we together?
Okay.
So now you do 3,640,000 minus 3.2 million multiplied by 24%. What do you have? 3,640,000 minus 3.2 million. Then multiply the balance by 24%. So what do we have?
Come again.
3,640,000 naira.
Okay.
Minus 3.2 million naira. You will have 400,000, 40,000 naira.
140,000.
Multiply by 24%. What do you have?
That is 105,600.
So you have 105,600. Now you add everything together. You had 21,000 plus 33,000 plus 75,000 plus 95,000 plus 336,000 plus 105,600 naira. What do you have in total?
300 and what?
Add 21,000 plus 33,000 plus 75,000 plus 95,000 plus 336,000 plus 105,600 naira. What do you have?
That's 665,600.
So if you are earning 4,800,000 per annum, the total tax you'll be paying is what? 600 and what?
665,600.
You'll be paying 665,600 naira out of your 4.8 million you earn. Do you understand that? So it is on this basis that your salary is computed. Okay, so this is how your organization computes your monthly salary. So what we practice now is the annual salary. So for them to get what you are entitled to on a monthly basis, okay, they do 600 and what? 600 and what do you give me now?
665,600.
So they will do 665,600 divided by 12. So that would be your what? That would be your monthly payee. That would be your monthly pay as you earn. So that would be the tax you'll be paying to the LIRS if you reside in Lagos, or any other state internal revenue service if you reside out of Lagos, outside Lagos. Do you understand that?
Okay.
So
Okay, sir.
that's that for the proportional tax. And then we have regressive tax. This type of tax is not in practice in Nigeria because it is not commonly applied, and the tax payable decreases as the taxpayer's income increases. So it is not encouraging because what it means here is that the rich pay less tax and the poor pay high tax. Okay, so it's not encouraging, and that's that. So another good example of the proportional tax is our value-added tax. Okay, is our value-added tax. So if you buy goods.
Hello, Sam. Okay.
Hello, can you hear me?
Okay, we can hear you now.
Now, okay, another good example of the proportional tax is what is the value-added tax. Now we have our value-added tax rate at 7.5%. If you consume a good,
Hello?
can you hear me?
We are trying to. Your voice is faint.
Okay. Can you hear me clearly now?
All right,
Yeah.
better.
Okay. So if you consume a goods or services worth of 1,000, and if you consume a goods worth 1 million naira, you still pay the same 7.5% VAT rate. Is that taken?
Okay, Sam.
So that's another good example of the proportional tax. Now, the second form of classification of tax is by incidence. Okay, is by what? Is by incidence. So now, what are the incidents of these tax? We have the direct tax and what? And the indirect taxes.
Tax.
Okay, so the direct tax is a form of tax that is accessible directly on the taxpayer, both corporate organization or individual, both corporate organization and individual. So who are required to pay tax on their property, income, or profits, among other things. Are we together? So an examples of these direct tax are the personal income tax, which we just explained. We have the company income tax or corporate tax, and we have the people have the tertiary education tax, and then the petroleum profit tax. Hello, are we together?
Yes,
We have
sir.
the personal income tax, we have the company's income tax, we have the capital gains tax, we have the tertiary education tax, and we have petroleum tax or petroleum profit tax. I know someone may want to ask if withholding tax too is a type of tax. Okay, no, withholding tax is not a type of tax. Rather, it is an advance payment of what? It is an advance payment of tax. Okay, withholding tax is not a type of tax like personal income tax, company's income tax. Okay, but it is what? But it is an advance payment of tax on what? On income. Okay, so you don't pay withholding tax on capital gain. No, you only pay withholding tax as an advance payment of your income tax, of which the credit note, that is the withholding tax credit note, will serve as what? We can be used to offset your future tax liability. Do you understand? So that's why we cannot call it a form of tax, because if it is a form of tax, once you pay it, then it should be what? It should be final. Okay, so withholding tax only becomes final in the hands of what? In the hands of the taxpayer, only if the taxpayer is a foreign entity, okay, or the taxpayer is not expected to pay income taxes. Probably maybe the taxpayer incur losses, and if the taxpayer is a resident. So if it is a form of tax, can you have recovery? Can you recover it?
Hello?
Can you hear me?
We can't hear you.
Okay. Let me take myself back a bit. I said withholding tax is never a form of tax because it is an advance payment of tax, particularly income tax. Okay, so when you pay your withholding tax, you can use it to offset your future tax liability. Okay, so and it only becomes a final tax where the taxpayer is a non-resident. Okay, so for all resident individuals that pay tax in Nigeria, okay, even if they don't have future tax liability that they can offset their withholding tax credit notes with, they can always recover it. Okay, so that's why it is never what? It is never a form of tax, because if it is a form of tax, then it should not have what? It should not have that. Indirect taxes. Are we together?
Yes, sir.
Okay, so for indirect taxes, these are taxes, or they are those taxes which are imposed on commodities paid by those upon whom ultimately not as taxes, but as part of the selling price of the commodity. And a good and clear example of this is our value-added tax. Okay, so whether you like it or not, whether you are poor or rich, whether you have or you have not, you pay what? You pay value-added tax only when you consume valuable goods or services. You have cost to consume valuable goods or services. Yes, you may not pay VAT, but indirectly, one way or the other. Another example is the stamp duties, which is payable on rent agreements and other form of agreements. We have excise duties, which is paid on imports, and we also have custom duties. So indirect taxes may affect the cost of living as they constitute taxation on what? On expenditure. Are we together? Now let's move to the tax system. We have tripartite.
Hello? Hello? Hello, sir?
Oh, I can hear you. Can you hear me? Take your question again.
Hello, sir?
Can you take it again?
I said this taxable income and the way of calculating it, is it also applicable to private sector
Of course.
or just the public sector?
No. In fact, it
Because
affects.
I use this opportunity to go through my own tax listing, and I noticed I don't think they're applying it. What I noticed that they use flat rates. So I don't know, and I don't see a place where any form of relief is being taken into consideration. So that is why I'm asking if it's applicable to private sector or just the public sector.
Sector. Hello.
Yes, I can hear you.
Do you work with private sector or
Yes,
do you work in the private sector or in the public sector?
Yes, I work with a private school.
Okay, you work with a private school.
Yes.
And you notice that it is what you agree with them that they are paying you. They are not deducting.
No, I noticed they are not deducting any form of relief, and I'm being charged 7% of my income monthly as tax.
Really?
Yes, I'm not seeing any form of relief from what I just calculated.
You've tested that, right?
Yes. That is why I'm asking, is it only applicable to public sector so that I will know how to raise my concern?
No, it is applicable to private sector too. In fact, in most cases, the tax authorities go after the private sector in most than the public sector, because the public sector will do that at source. So it is only the private sector that most time evade taxes. Okay, and corrupted agency. Okay, so that you can challenge them. Maybe probably after the class, you can consult me. So let me, so that we can be very sure of what you have done.
Okay.
7% are deducted, you have not been applying any relief. So it seems you have been overpaying. Okay, so you have been overpaying. You have been paying more than what you should be paying, and it should not be like that, because even the government will not want you to owe them, and in that case, you should not pay more than what you ought to pay. So that's that. So, like I said, we have our tripartite aspects of tax system. One, we have the tax policy, then we have the tax laws, and we have the tax administration. Okay, so everybody say I have my policy, I have my policy, I have my policy. So in tax too, we have tax policy. Okay, and this is exactly it's like a general statement. Okay, or let me say it's a general statement. I have my policy, I have my policy, you have your policy. It's like you have an intention that this is what I can do and this is what I will not do. Okay, so these are my do's and don'ts. Okay, so tax also have its policy, and this policy guides the thinking and the action of all concerned towards the realization of the set goals. They usually include movement of emphasis from income tax to consumption tax that is less prone to tax evasion. In fact, let's use the recent developments in the tax in tax. Okay, recently the Finance Act.
Hello, sir.
Hello, can you hear me? Hello.
Okay, we can hear you now.
Okay. Now
We can hear you now.
okay.
Yes, I can hear you.
So now okay, that's good. Now let's use the recent developments in tax as a good example. Okay. Now we have the Finance Act of 2021 that has just been that is just assented to by the president. Okay. So in this Finance Act, we have the sugar tax. Okay, we have the sugar tax, we have the education tax rate being reviewed upward from 2% to 2.5%. These are thinking, okay? These are thinking by some stakeholders that how do we increase our revenue generation? How do we reduce our debt financing and the likes? Okay, so let's add more tasks. Let's increase the existing one. You recall that our value-added tax too is at 5% before, or sometimes around February 2021, it was reviewed in the Finance Act of 2019, which was signed on January 13th, 2020. February of 2020. Then the rate was reviewed upward to 7.5% from 5%. Okay, so these are policy. Okay, so these are policy. So they govern they guide the administration of tasks, the thinking and the action of all concerned stakeholders towards the realization of the set goals. Okay, so the tax policy also introduced self-assessment regime or self-assessment scheme. Self-assessment regime. In the self-assessment scheme, the taxpayers are allowed to assess themselves. Hello, can you hear me? Hello, are you there? Hello. Hello, can you hear me? Mr. Taye or Mrs. Taye, can you hear me?
Hello, the line.
Hello, can you hear me now? We are discussing the tripartite tax system. And that's what we have in our question 5. Explain in brief the 3 aspects of the Nigerian tax system. And I've mentioned that we have the tax policy, tax administration, and tax laws. So we are on tax policy, okay? And I equally have assignments for you guys too, okay? So we are fully loaded. I'm very sure if you follow our class consistently, in fact, these diets, I must have best student from you guys.
Wow. Glory to
Okay.
God.
So to God glory, all of my students passed taxation last night. So
Wow.
it's a good one for me. Okay, now let's come back to class. So where do we stop? We stop
Tripartite
we stop at
policy.
task. Okay, task policy. So I've explained that the task policy emphasis is on what is on the should we be aggressive in our task collection? Should we implement more form of tasks? Should we increase the tax rates for the existing tasks? Do you understand? So it is a collective effort. Okay, it is a collective effort, contribution from concerned stakeholders on what to do. They set goals. So after a particular period, they review whatever they have implemented and like so. The tax policy is not just a policy like that. We have the introduction stage, or should I put it as introduction? The collection of data. Okay. So after the collection of data, they review the data, they transform this data into meaningful information, and they come up with the policy. Then following that, we have implementation. So the Finance Act we are having now, okay, does not just start one night. Okay, so it is probably in our chapter 3 or chapter 4. Okay, so we'll be discussing the Nigerian tax policy. So it is a full topic on its own. Okay, hello, are you there?
Okay.
Okay, so it's a full policy on its own. So we'll be discussing the Nigerian tax policy of 2007. So there you will see how the fiscal policy committee comes up with policy and the likes. Okay, so the implementation stage lies in the hands of the tax administrators. Okay, so when we get there, we will deal with that in detail. Okay, so that's that for tax policy. We have tax laws. Okay, so from the types of taxes we have, okay, so we can develop tax law. So the type of taxes are what are results of tax policy. Okay, oh, let's have company income tax that should be levied on the corporate organizations. Oh, let's have personal income tax that will be levied on individuals and business enterprises. Oh, let's have value-added tax as a consumption tax. Now they have come. We have sugar tax. Abi, our tax on what? On our tax on what? Our tax on carbohydrated carbonated what? On our tax as on carbonated drinks. Am I correct? So it's a policy.
Yes.
Okay, it's a policy. Now there should be a law. Abi, if you have a policy, there should be a law that we implement, that we strengthen the administration, that we make it legal. Okay, so now we have sugar tax. Where do we classify sugar tax? Okay, so it is a type of indirect tax. It is an indirect tax type, and it is classified together with our excise duties, customs and excise duties. Are we together? So it is categorized with the excise duty. So very soon, I know you have the sugar tax law. Okay, so we have the tax laws, which is like a backup for the tax policy. Company income tax. We have the Personal Income Tax Act, CAP, Law of Federation of Nigeria 2004 as amended. We have the Stamp Duties, Education Tax Act, Value Added Tax Act, Capital Gains Tax Act. Okay, please, you guys should please go and download your video lectures, watch them, so you have better understanding of what we are discussing. And for our subsequent classes, or for our subsequent class, ensure that you download the video, watch them before joining the class. Okay, so that we can have an interaction session in the class. Are we together? Okay, so and during while watching your video lectures, if you have anything to clear on here, you can always drop them on the class platform on WhatsApp. You can always drop them in the class platform on WhatsApp. Okay, so that's that. Now let's take the basic concepts in taxation. Basic concepts in taxation. Oh, sorry. We have tripartite aspects. We've only discussed two. So, and it means we have one more, which is tax administration. So if you have a policy, sugar tax, value-added tax, companies income tax, and we have a law that back them up, which is, for instance, for the company income tax, we have Company Income Tax Act. We have the Value-Added Tax Act. Can the act, whether be it the policy or the law, administer themselves? No. There must be a group of people somewhere that we interpret the tax policy we have, that we interpret the tax law. So it involves practical interpretations and application of the tax laws. The bodies charged with the administration of tax in Nigeria are the federal, the state, and the local governments. So are these three levels of government. We have the tax authorities that administer tax or taxes on the behalf of these tiers of government. So for the federal government, we have the Federal Inland Revenue Service, and this agency is established by the Federal Inland Revenue Service Establishment Act of 2007. The Federal Inland Revenue Service is established by the Federal Inland Revenue Service Establishment Act of 2007. Then for the states, we have the State Internal Revenue Service, and which is established under Section 87. It is established under Section 87 of the Personal Income Tax Act 2007 and 2004, sorry, as amended. Then also we have the Local Government Revenue Committee. We have the Local Government Revenue Committee. This Revenue Committee is established under Section 90 of the Personal Income Tax Act. Of the Personal Income Tax Act. Are we together? Now, let's go to the concept of taxation. What are the concepts of taxation? There are some basic concepts of taxation or in taxation, which will assist and will make us have a good understanding of taxation. Now, let me roll them out. We have the tax base, we have the tax yield. Please be noting them. We have the tax base, we have the tax yield, we have the tax rate, we have the tax incidence, we have the tax burden, we have the tax impact, tax shift, and tax effects. So in all, we have 8. Now let's take them one after the other. We take the tax base first. This is a measure upon which the assessment or determination of tax liability is based from the word tax base. It is the measure upon which the assessment or determination of tax liability is based. Now, it is that portion of your income that suffer tax. So in my discussion, in my explanation earlier, when Mrs. What was her name? Mrs. Obiagbozo. Am I correct? If I'm right. So when she asked the
Yes,
question
sir.
on
You're
the
correct, sir.
progressive task, okay. So I made two different illustrations: income at 1 million naira and income at 4.8 million naira. Okay. So you notice that before we start applying our tax rates, what do? We first deduct some relief. We take off some relief, meaning that our tax is not based. Look at the word. Our tax is not what? Is not based on the whole 4.8 million. Rather, it is based on what? It is based on the taxable income. Are we together? So that's our tax base. So our tax base is the first 300,000 of your taxable income after you've deducted your pension, if you've deducted your national housing fund, if you have voluntary contribution, you deducted that, plus 200,000 for free, and plus 20% of your gross income. Are we together? So the tax base for personal income tax is on the graduated table. Then for corporate organization, the tax base is just 20% or 30%. Okay, so depending on the category of company or the classification of company, do you understand? So, and you are not assessing if the company makes sales of 20 million, you cannot say that you want to apply the 20% or 30% tax rate on the whole 20 million, or if they make 100 million, you cannot just say, hey, because the Finance Act has classified a large company as a company that has a gross turnover of 100 million and above, and their tax will be 30%, and you now just apply 30% on such income. No, the taxpayer will not agree with you because there are incentives in the tax law. The tax policy has given some incentives which is backed by law. Okay, so it is after you have taken all of these into consideration, then the balance, which is known or referred to as the taxable income, is what will suffer tax. Are we together? That's tax base. Which other one do we mention? We have tax yield. Okay, so this particularly has to do with the tax administrator. That is, it is in return, or it is a form. It is in form of return. Let me put it that way. It is in what? It is in form of a return. So that is what revenue has the government generated from tax. So is our tax revenue growing or declining? So that's how you see them coming up with all these policy, sugar tax, increment in the existing tax rate and the likes, because they are operating like a private sector. They have budgets, and everybody will always want increase. Okay, so, and is to redistribute wealth among the haves and have-nots. That's it. So that's tax yield, is the return from the tax collected from taxpayer. Then we have tax rates.
Come again. I didn't get that one. Tax was tax.
Yield.
Come again.
Y-I, tax yield. Y-I-E-L-D, tax yield. Okay, so
Okay.
it's like my contribution yield a good result. Okay, so now government is collecting tax or taxes from individuals, corporate organization, and the like. Okay, so now what's the benefit? What's the return from this tax? You know, we have FIS offices built in almost every area in the country, most especially in the urban area. Okay, now some of these buildings are not owned by government. Okay, they are rented. They are rented. So you now see that these FIRS, we have to pay rent. So each of them, they are like what? They are like an investment center or profit center. But let me put it as an investment center because they incur costs on their own and they account for whatever they generate. So that's why you see the aggressiveness in them, because each office is independent on their own, though there is a central body, but you account for the revenue you generate, and they will. Are you having any returns? Is there any yield? Because we incur costs too. We have staff costs, we have the apartment cost, which is the rent cost. Do you understand? We have the administrative costs. Okay, so they also incur costs on fuel, diesel, and the likes. They have security guards, they pay. Do you understand? So it's not only that government is collecting tax or generating revenue, they also incur costs to generate the revenue. Are we together? Hello. So we have tax rate,
Yeah,
which is clear. So it describes the burden ratio. For example, value-added tax is at 7.5%. And if personal income tax, we have a personal income tax table, which we have demonstrated today. And also we have tax incidence. It is an economic term for the division of a tax burden between buyers and sellers. And a good example of this is the value-added tax. You know, ordinarily, the final consumer of the goods or services bear the burden of the value-added tax. Okay, so companies do not bear the burden of the value-added tax. They only bear the burden of the value-added tax if they are the final consumer of the goods or services consumed. Are we together? So this burden is always passed on to, for instance, now if you are a manufacturing company, you've incurred VAT costs on your material you use in producing your finished goods. So, and in return, when selling the goods too, you are expected to charge output VAT. Now you sell to the distributor. The distributor has incurred an input VAT cost from buying these goods from you. So when the distributor is selling to the retailer or the wholesaler, they charge VAT. Okay, so now this wholesaler will not also equally bear the burden of this VAT. Rather, they will transfer it to the retailer or to the final consumer. So which also to the final consumer, it will be an input VAT, but to the seller, it is an output VAT. So in essence, value-added tax has two forms. We have the input VAT. It has two classes or classification. We have input VAT and an output VAT. So the input VAT is for who? Is for the buyer, and the output VAT is for who? Is for the seller. Are we together? So that's the tax burden. And we have tax impact. This is the effect of a tax on the production or consumption of the product being taxed. Okay, for example, the tax impact of raising the levy on tobacco might be a reduction in tobacco sales. Now, let me ask you, what is the tax impact of sugar tax? Hello?
To reduce the taking of soft drinks.
Thank you, madam. Shows you are following. So now we have tax shift. Now, this is also referred to as tax swap. That it is a change in taxation that eliminates or reduces one or several taxes and establishes or increases others while keeping the overall revenue the same. Now, a good example of this is that our government in 2019, or let me put it this way, in 2020, they come up with a policy, theory, okay, that classify companies into what? Companies into three. Now, hello, can you hear me?
Yes.
Hear you.
Okay. So they categorize company into three. We have the small company, we have the medium company, and we have the large company for tax purpose. The small companies are companies with revenue threshold of 25 million and below, and the medium companies are companies with revenue threshold of between 25 million and 100 million, and the large companies are companies with revenue of 100 million and above. Now, companies with 25 million gross turnover and below are exempted from paying income tax. In other words, their income tax rate is 0%. So if your income tax rate is 0%, if you have 1,000 naira, 1,000 naira multiplied by 0%, what do you have?
You have
Hello?
0.
You have 0. So meaning that you are not paying tax. Okay. So for the fact that they are exempted or they have been classified as small companies, they are also exempted from the payment of value added tax. Okay. So while the medium-sized company pay income tax at 20%, and the large company pay income tax at 30%. So prior to the introduction of this Finance Act, our income tax rates, companies' income tax rate in Nigeria has been a flat rate, okay, and which is 30% for every companies, except for small companies, which are companies with turnover of less than 1 million naira. So if your turnover is less than 1 million naira, prior to the introduction of the Finance Act, you are small companies and you pay tax at 20% on your taxable profit. Okay, but if you have revenue of above this 1 million naira, then you pay tax at what? At 30%. That's before the Finance Act. But in the Finance Act, there is a tax shift. The value-added tax rate was increased from what? From 5% to 7.5%.
7.5.
Why? For the company's income tax, we have what? We have a reduction, Abi, because of the classification. Some companies are exempted totally because their income tax rate is 0. And why some has what? Has a grace. Instead of paying 30%, they pay what? They pay 20%. Sure, you understand now. So there is a
Yes.
decrease on that of the company income tax, and there is an increase on what? On the consumption tax, which is the what? Which is the value added tax. Also, there is what? There is a notice on the stamp duty. Prior before the 2019 Finance Act and that of the 2020, most citizens are not aware of stamp duty. Anybody can enter into an agreement at any time, at any fucking time, okay, without bearing the cost of stamp duty, okay. But with the notice from the FIRS and then enlightenment from different bodies, in fact, particularly from the FIRS, people now know that they have to pay stamp duty on any agreements they entered to for it to be what? For it to be tenable in the court of law. Are we together? Okay.
Yes, sir.
So that's a good example of the tax shift. And we have tax effect, which is a general term that describes the consequences of a specific tax scenario with respect to a particular tax paying entity. So if I may ask you, what will be the tax effect? What will be the tax effect of sugar tax on brewery, on Nigerian breweries? What will be the tax effect of sugar tax on Nigerian breweries? Ma?
I think
Eddie,
it
I'm
will
trying.
reduce.
Okay.
I think it will reduce beer consumption.
It will reduce beer consumption, and when it reduces beer consumption, what is the effect on Nigerian brewery?
Their profit rate will drop.
Thank you so much. So that's tax effects. And
Sorry, before you continue, I really want to understand, is there a difference between impact and effects?
of course, the tax impact is on the consumption, who the person consuming the goods, because you have to pay more, Abi. You have to pay more.
All right.
And so they are similar, but used in different circumstances. Okay, so the
Okay,
impact,
sir.
it will also affect the company. It has impact on the company too, because it will reduce their sales. Are we together?
Yes, sir.
Now, let's look at the distinction between taxes and levies. Distinction between taxes and levies. We have, let's use the definition of 1997, and which best differentiates taxes from levies. Tax was described as a compulsory contribution imposed by the government, even though taxpayers may receive nothing identifiable in return for their contribution. They nevertheless have the benefit of living in a relatively educated, healthy, and safe society. So from this definition, one can affirm that tax is different from levy. For instance, now, if you reside in Lagos, if you break the traffic rule, who will come after you?
The last man.
The last man people, of course. So if they come after you and fine you, they ask you to pay 100,000. Could that 100,000 be said to be a levy or a tax?
11.
Of course, that should be a levy, because it is not a tax. A tax will always be backed by what? By law. You see that those people that their discretion to ask you to pay any amount as a levy or as the fine. Do you understand? So, but tax, everything is well spelled, well described and defined in the tax law. Are we together? So,
Yes, sir.
if your car document is expired and you are using your car on the road, so if you are stopped by the road safety, you have committed an offense, right? So, and if they ask you to go and renew your driver's license or your car papers, so is that a tax or levy? Hello?
That looks like a tax.
But it is what? It is a levy. Am I correct?
But you are not being fined, so they just ask you to go and renew it. It's not as if they are fining you for not having updated license.
But that of last man, you said that it is a levy.
Yes.
Okay? Even though it is a fine. Now let me describe levy in another way for you. I'm only trying to bring practical scenario to my explanation. You see, for tax, if you are paying tax, that doesn't mean that you get direct benefit or return from the government. But for every levy you pay, you must get a direct return.
Okay.
You understand? Now, for instance, now, I just mentioned that if you are apprehended by the road safety because your driver license has expired or your car papers are not complete, they ask you to go and pay some certain fee as a fine, plus you making sure you get your car papers updated. You have your original driver license or a temporary one, which is still valid. Okay. Now, why are you doing all this? It's because for you to access that road, all your car papers must be intact. For you to drive on the road, you must have a driver's license. Are we together? So the fee you pay to get that driver's license is a levy, because you are getting a benefit in return, a direct benefit. Because without that license, can you drive on the road? Hello?
No.
Okay. But
No.
if you are paying your tax, and you are quite sure that it is the income from tax that was used to instruct that you want to join the train, but you are not getting tickets. simply because you are paying your taxes. Will you be allowed to join the train without obtaining your ticket?
No.
It is whose money, or where do they get the money they use in constructing that railway?
Is
Is it
our
not
money they use?
from the payment of tax or
Yes.
taxes?
Yes.
So do you now understand the difference between levy and tax?
Yes. Yes. Thank you.
Let's continue. Okay, so that's the distinction between taxes and levies. Now let's take our principles of taxation. We have principle of equity, certainty, convenience, administrative efficiency, simplicity, productive, flexibility, and stability. Now let's take each one of these in brief. We have equity. Yes, equity is just that the redistribution of income and wealth. Okay, so you get from the rich and you share with the poor, so that the poor too can have access to some things. Take for instance now, if Dangote is coming to the airport from his house, okay, and he wants to get to the airport by road, okay, is there a special road for Dangote to ply? Hello, are you there?
You use the same road.
We use the same road that
Every other person is using.
that the poorest man in this world can use or will use if he wants to go to the same airport. Am I correct?
Yes, correct.
So that's equity. So government has collected the tax from Dangote to construct road. Okay, so to construct, because the road is a public facility for every citizens, including the president. Are we together? So there is no road, or there is no road that is constructed for the rich to ply alone. It's for all. So the collection of taxes is to construct, build, and ensure we have a good facility in place. Even though we have not gotten there, at least our governments are trying. Certainty too is an important principle of taxation, because the taxpayer must know the time to pay their tax, the manner of payment, and the amount to be paid. And thank God, Madam has just observed that they have been over deducting taxes on her salary. So she needs to fight for that if she's very sure, okay, because tax law is clear, okay. So the tax payments must be certain and clear. The timing and the likes must be known by the taxpayer. So the determination of tax liability should not be left to the whims and caprices of tax officials. Okay, so we have convenience. The social and economic standing of the taxpayer must be taken into consideration. And then administrative efficiency and the process of levying and collection. In fact, I made mention that these FRS people today incur cost on rent, staff cost, and the likes. So that's why you see the aggression in them, chasing every type of taxpayer. Come and pay this, come and pay that, because they don't want to what? They don't want to incur excessive costs. They want the revenue they generate to cover for the cost, and they should have excess, because it is only when they have excess that government have more money to build or to finance its projects. Are we together? So because
Yes.
they need to be taken care of first, And I think their share of the revenue they generate is about 5% or thereabouts. Okay, so they first take their 5%, and it is whatever we have that is paid into the central bank account. So we have simplicity. The tax system should be such that it's simple to understand by the taxpayers, productive. I've mentioned that you can always take the administrative efficiency together with the productivity of tasks. Okay, so there should be efficiency in the collection. The whatever they collect should cover for the cost and also provides for government finance. So we have flexibility and stability. A good tax system should be flexible enough for changes to be effected by any government of the day. This flexibility, however, must be balanced with the need to have a stable tax system. Are we together? So what are the enabling acts? What are the enabling acts? These are statutes empowering a person or body to take certain action, especially to make regulations, rules, or orders. So some of the enabling acts has been discussed. We have the Personal Income Tax Act, Peter, of 2004 as amended. We have the Companies Income Tax Act, CITA. We have the Value Added Tax Act, VATA, among others. Okay, so these are acts that enables the collection of tax. So for companies income tax, the Companies Income Tax Act is the act that enables the collection of the company's income tax or collection of income tax from corporate organizations. Are we together? So in Nigeria, the National Assembly is the body saddled with a responsibility for the making of laws amongst other responsibilities. So what are the sources of Nigerian tax laws? We have about 7 sources of Nigerian tax laws. Hope we are together. 1, we have the customary laws. 2, we have the statute laws. 3, we have the case laws. 4, we have circulars issued by and practices of the Inland Revenue. 5, we have opinions of tax experts and authors insofar as the courts take judicial notice of them. 6, we have budgets and pronouncements of relevant ministries. And then 7, we have the Constitution of the Federal Republic. Are we together? Okay, now for the customary laws, at the start of this class, I made mention of Ishakole, payable in Yoruba land to titular heads of communities or the Obas. So these are the native laws and customs governing the taxation of incomes, goods, and properties of persons or communities within an ethnic group. So Ishakole is in the Yoruba land, and we have Zakat in the northern part of the country. Okay, so we have the Ozuzunku. I'm sorry for the pronunciation. That's applicable in the eastern parts of Nigeria. So for Zakat, which is the tax payable by adherents of the Islamic faith on their wealth, which has been in their possession for a full year. Such wealth includes money, properties, etc. So that's customary what? Customary laws. In essence, the statute laws does not have an overriding position on the customary laws. Okay, so each of these laws they operate independently. Okay, if you acquire land in Lagos, or probably, let me just put it in the rural areas. Okay, in the rural areas, even in the urban, in the city, you have to pay some fee to the so-called omonile. I don't know what they call them in your area. Okay, but in my own area, they call them omonile. That is, the children of the landowners. Permit me to use that word. Okay, so because if you don't pay them, they won't allow you to build to construct anything on your land. Forget about you acquiring it outrightly or not. Okay, so they are still in existence and in practice in some parts of the country. So for the statute laws, these are tax legislations passed by acts of the national and state assemblies and bylaws by local government authorities in a democratic government, or decrees or edicts under a military government. And examples of such include the Value Added Tax Act, the Stamp Duty Act, and the Customs and Excise Duty Act. Are we together? Among others. So we also have the Personal Income Tax Act, the Company Income Tax Act. Okay. And we equally have the case laws. We have the case laws. And a recent one is that of the River State and the Federal Inland Revenue Service and the federal government. Okay, where the High Court sitting in River State decides, okay, make a judgment in favor of the River State government on the collection of value-added tax. If at the Supreme Court, the court judgment favored River State, it may be that state will now be the administrator of what? Of the Value Added Tax Act, of the Value Added Tax. Are we together? But because the Federal Inland Revenue Service and the federal government has an interest, they file an appeal at the court of law and to hold the judgment of the High Court. And then the River State also do what? The River State has also filed an appeal because the appeal the Federal Inland Revenue Service and the federal government file in the Court of Appeal is to maintain the status quo. That is, the federal government should still be the administrator of the value-added tax. Okay, so if the Supreme Court rule in favor of the River State, then the decision, okay, the decision of such case may be cited or may be used as reference in what? In future what? In the future. Okay, so if you are a law student, okay, if you are a law student, you can always remember this case, the case of what's this common case we use? I've forgotten, but I remember, probably before we end this class. Okay, so in tax, we have the case of Trading Company Limited versus Federal Inland Revenue Service. In Lagos State, we have the case of hotel owners. Okay, we have the case of hotel owners versus the Lagos State and the Federal Inland Revenue Service. We have some other cases too. Recently, we have the case of multi-choice. So these are case laws you can always make reference to when you are practicing tax. Okay, so this is the doctrine of stare decisis, that is judicial precedent. Under this doctrine, judgments pronounced by Superior Court of Records, namely High Courts, Appeal Courts, and the Supreme Court on principles of tax laws and their interpretations of the provisions of tax statutes are binding on the lower courts. Are we together? So we have circulars issued by and practices of the Inland Revenue. In 2020, because of the COVID-19 the lockdown in the state, in the country, and vis-a-vis the NSAS stuff, the Federal Inland Revenue Service issued circulars giving taxpayers some waivers of interest and penalties. You can waivers of late submission penalty on returns filing and the likes. Okay, so this is announced through the FRS circular. Okay, so and also there are a lot of things that are being done through this circular explanation of a particular tax law or a particular section of the tax law and the likes. Are we together? So we have options of tax experts and authors insofar as the courts take judicial notice of them. We have budget and pronouncement of relevant ministries. We have the Constitution of the Federal Republic of Nigeria. So these are the 7 sources of the Nigerian tax laws. Are we together? So note them.
Yes.
Then we go to multiple taxes in Nigeria. Multiple taxes in Nigeria. Now we start with the nature of multiple taxes. This is a tax regime under which various and similar types of taxes are imposed on taxpayers by different tiers of government. Like different tiers of government. For instance, why the federal government imposed the value-added tax on consumption and made it applicable throughout the federation, some states, notably like Lagos State, introduced the sales tax based on the same principle as the former, that is as that of the value-added tax, and made it applicable in Lagos State. So that's why hotel owners and occupants, okay, hotel owners and occupants pay tax, consumption tax at 5% in Lagos State, plus the value-added tax they pay. Okay, so because the court ruled in their favor. So particularly guilty of the problem of multiplicity of taxes are the local governments, where all kinds of taxes were introduced. In fact, this tier of government pursued the collection of taxes or levies imposed on taxpayers with reckless abandon. I don't know if it happens in your local governments, particularly if you reside in Lagos. You see how these local government dogs, I'm sorry for that word, how they go after people in the name of what? In the name that they are collecting revenue for the government. They can hit you, they can hit stick on you, they can punch you, particularly on for these bike on these bike riders, asking them for permits, riders permits and the likes. Okay, so the type of taxes introduced and collected by the local government vary from one local government to the other, and some of these taxes are entertainment tax, road tax, permits, refuse collection tax, market taxes and levies, loading and offloading and the likes. Okay, so if you reside around Mushin, Juwoye and the likes, see how that place is messed up. Why can't we control that area? Because government are getting money from them, most especially the local government. You come there around 4:30, 5, 6. You see all these area boys, all these local government dogs or whatever, collecting money from these market people, maybe 15 naira, 100 naira, for them to just for them to display their markets by the side of the road or at the middle of the road. So they don't even care what that may cause on other citizens. Okay, so these are just some of the multiple taxes. Okay, so and we have what are the causes of this multiple taxation in Nigeria? The causes of multiple taxation in Nigeria include lack of funding. Okay, so because these local government people, they get their money from the state, and if the state governor is greedy, they may not get exactly what they are entitled to. Okay, so they may not get exactly what they are entitled to, and because of this, they were aggressive in the collection of their levies or dues or tax, whatever. Do you understand? So lack of funding, particularly for most states, may result in multiple taxation when the states attempt to source for funds through levying of taxes without taking into consideration whether or not such taxes are being levied either by the federal or local governments. So some state government deliberately deny their local government the revenue due to them. Consequently, a local government as a way of survival desperately and aggressively focuses on any drive that will generate revenue to it. Are we together? So among other things are lack of tax education and awareness, multiplicity of revenue agencies, overlapping taxing rights as contained in the Constitution, and the taxes and levies approved list for collection, and among others. Are you together? So, in fact, these local government people, some of the ideas or some of the things they use in ensuring that they collect these tax, or let me put it this way, their enforcement policy includes mounting of roadblocks, use of revenue agents or consultants. Okay, so you see them, they block the road, they mount roadblocks and put spikes on the road to force motorists to stop at the approach to the roadblocks. Who does that most in this country? The police. You will see them, they mount roadblock so that users of the road could slow down, and by so doing, they harass or they ask you to give them something. You pay unnecessarily, of which the money of which you cannot account for. So if the police are doing that, so how do we stop the local government thugs or boys from doing that too? God is in control. Okay, so the use of consultants or agents was popular with the state and local government tax authorities, while some state tax authorities employ external tax consultants for the audit, assessment, and collection of tax under the accelerated revenue generation programs. The local governments collect revenue under the aegis of the Joint Revenue Association, while under the accelerated revenue generation programs, especially under the past military regimes, the collection of taxes from companies was enforced using the law enforcement agents. Are you together? So what is the solution to this problem of tax multiplicity? The 1999 Constitution and the multiplicity of taxes. The Constitution seeks to eliminate multiple taxation at all levels of government as provided for in Part 2, Paragraph 7 to 10 of the Constitution, which states that in the exercise of its powers to impose any tax or duty on capital gains, incomes, or profits or persons other than companies, and document or transactions by way of stamp duties, and where an act of the National Assembly provides for the collection of tax or duty on capital gains, incomes, or profits, or the administration of any law by an authority of a state in accordance with paragraph 7 thereof, it shall regulate the liability of persons to such tax or duty in such manner as to ensure that such tax or duty is not levied on the same person by more than one state. So simply put, the 1999 Constitution addressed in part the multiplicity of taxes. So other possible solutions to multiplicity of taxes in Nigeria include reviewing all the existing taxes in Nigeria and harmonizing where necessary. So you notice that the Finance Act of 2021 has a paragraph or has the provision that states that no other body apart from the Federal Inland Revenue Service is empowered to audit or to collect taxes from the taxpayer, particularly for taxes that are in purview of the Federal Inland Revenue Service. Do you know what they are trying to do? Because the strong arguments on the case between Rivers State and the FIRS was that Federal Inland Revenue Service was not empowered, or let me put it this way, that the administration and collection of the value-added tax is not under the federal government's purview in the 1999 Constitution. Rather, it is under the states. It is the states that should administer the value-added tax. Okay, so that's why the federal government just decides to strengthen or to tighten the loopholes in the Constitution so that they are not overthrown by what? By subordinates. Okay. So also we have the reviewing the Constitution to address the overlap in taxing rights of different tiers of government. Now let's move to the objectives of tax identification number. Yes, a good one is the creating closer linkage between tax authorities in Nigeria, aiding cooperation and information sharing amongst the tax authorities, and increasing revenue generation accruing to all tiers of the government. I'm expecting you to ask what is the meaning of tax identification number, or what is it used for? Tax identification number is a unique 9-digit number allocated to taxpayers with a view to identify an individual or any other entity in tax returns and other documents filed with the tax authorities. Tax identification number is a unique 9-digit number allocated to taxpayers with a view to identifying an individual, business, or any other entity in tax returns and other documents filed with the tax authorities. Are we together? Now, we have the tax amnesty in relation to voluntary assets and income declaration scheme, VADS, and voluntary offshore asset regularization scheme, VOAS. Okay. So we've taken the efficiency of administration. Now, the federal government of Nigeria recently approved the voluntary asset income declaration scheme. The scheme was aimed at providing tax defaulters an opportunity to defray all unsettled tax liabilities. Yes, this happened sometimes around 2015, during the first year of the president in his first term. Okay, so under the scheme, tax defaulters were required to voluntarily disclose any previously undisclosed assets and income relating to the preceding 6 years of assessment within a 9-month period from 1st July 2017. It has been described as giving tax amnesty to defaulters, albeit for a limited period. At the expiration of the VADE scheme on March 31st, 2018, the federal government extended the scheme by an additional 3 months due to a clamor for extension by the public. The VADE scheme eventually closed on June 30th, 2018. Are we together? Hello, are we together? So what's the objective of this VADE? The aim of the Nigerian Voluntary Asset and Income Declaration Scheme was to provide taxpayers with a time-limited opportunity to regularize their tax status relating to previous tax periods and pay any taxes due in exchange for fully and honestly declaring previously undisclosed assets and income. Taxpayers benefited from forgiveness of overdue interest and penalties and the assurance they would not face criminal prosecution for tax offenses or tax investigations. And for the government, they have brought more taxpayers into the tax net. Are we together? Okay. Now, the eligibility to participate. This scheme again was opened and targeted to all persons and entities that were in default of their tax liabilities in any way whatsoever, including those who earned an income or owned assets but were yet to register with the relevant tax authorities, registered as taxpayers and add additional disclosures to make or needed to amend prior disclosures, and or were registered but were not filing returns, we are not fully declaring their taxable income and assets, we are underpaying or under-remitting, we are under a process of tax audit or investigation with the relevant tax authority, and or we are engaged in a tax dispute with the relevant tax authority, but we are prepared to settle the tax dispute out of court. It seems that much was given to the taxpayer then. Am I correct? Hello?
Okay.
Yeah, we are with you.
Okay, that's good. Now, what are the requirements for valid declaration? In order for an application pursuant to the scheme to be valid, the following requirements must be met. The disclosures by the taxpayer should be voluntary and not compulsory or mandatory. The disclosure must be full, frank, complete, and verifiable in all material respects. The disclosure must be made using the voluntary asset and declaration scheme forms or in any other form or manner as may be prescribed under the scheme, and the assessment of tax payable must be carried out by relevant tax authority. Are we together? Okay, so a taxpayer who truthfully and voluntarily declared his assets and income, complied with the regulations and guidelines, and paid all outstanding taxes enjoyed the following benefits. 1, immunity from prosecution for tax offenses. B, immunity from tax audit. 3, waiver of interest. D, waiver of penalties. And then 5, which is E, option of spreading payment of outstanding liabilities over a maximum period of 3 years as may be agreed with the relevant tax authority. This is a great one in the history of Nigeria. So provided, however, that the remission or waiver granted under these regulations shall not prejudicially affect or invalidate any court order or judgment already obtained in respect of any default in payment of tax for which interest and or penalty have already accrued, the reliefs mentioned above are available in respect of all taxes administered by the Federal Revenue Service, as well as those administered by all state boards of internal revenue. What's the consequence or consequences for failure to comply with the VADs? Failure of any defaulting taxpayer to truthfully and promptly take advantage of this scheme shall at the expiration of the scheme result in the following consequences. A, liability to pay in full the principal sum due, liability to pay all interest and penalties arising therefrom, liability to be prosecuted in accordance with relevant extant laws for tax offenses, withdrawal of any reliefs which may have been granted to the participant, liability to undergo comprehensive tax audits, and any sum paid in relation to the scheme may be counted as part payment of any further outstanding tax in respect of undisclosed information. So all information provided by the taxpayer under the scheme shall be treated with utmost confidentiality in accordance with the provisions of the relevant laws, save where it is stated otherwise. So any tax official or persons duly authorized to receive information under the scheme who breaches the confidentiality of information received or exchanged under the scheme without the authorization or in breach of relevant laws shall be liable to prosecution under extant federal and or state laws. Do you understand?
Yes, sir.
Okay, ma. Now, I believe we have treated all the questions we have here in the class. Do you agree that with me? Hello? I want to believe we have treated all the questions we have for today in the class, during the class.
Yes.
Okay, by now you should be able to differentiate between direct and indirect taxes. You should be able to give a brief note on progressive tasks, proportional tasks, regressive tasks, and you should be able to explain to us the principles of the good tax system. If you are asked to discuss any 4 major sources of tax laws in Nigeria, you should be able to do that. That's where we have our customary statute laws, cases, and the likes. Okay. So, and also we have the objectives of taxation, which we have discussed in detail or in brief in today's class. And when we are asked to explain in brief the tripartite aspect, that is the 3 aspects of the Nigerian tax system, you should be able to do that. Am I correct?
Yes.
Okay. And then also, if you are asked to explain the multiplicity of taxation in Nigeria, as well as outlining the causes and possible solutions to multiple taxation in Nigeria, you should be able to do that as well. Okay. So I have assignment for you guys. This particular notes has been shared on the class platform for students that are just joining or that have just been added to the platform. You